Hello, active traders, and welcome to Trading Open Live Room Open House for Monday, March 6, 2017. This is Ken Calhoun, president of the original Day Trading University and Trade Mastery, coming at you live here. We've got some outstanding charts to work with as usual. We'll see where the trade setups are in today's markets. As always, all information is for educational use only. I'm not making advice or recommendations about what to buy, sell, or hold. By watching this, you hereby agree not to make actual trades. This is all for educational information use only. We don't make any profitability nor performance claims. We do not do live real money trading here. It's all for a safe learning environment so that you can learn the patterns and get up to speed. Don't ever try and follow someone else's alerts and actually trade off of them. Instead, learn from the patterns that are taught and the thinking behind the alerts. And you've seen the success rate of my alerts. That may be appealing, but what should be more of interest to you is to learn the patterns and the entry and the exit skills and timing skills and the rest of it. So always nice to work with so many of you. It's a real thrill to have so many of you here today. We're up at 408 registered, so a really big turnout. I wanted to thank all of you for being here. We've got lots of techniques and strategies to get underway with, so let's jump into it. Just a reminder for those of you who are new, we look for wide range charts. The better the range, the better the odds of making a successful trade entry, is my assertion. If you got a stock with a 50 or 80 cent total days trading range, your odds of getting a piece of the action of making a winning trade are much lower than something that has at least a 1 point or preferably 2 or 3 points previous day's range. You absolutely have to have 15,000 shares, 15K shares per minute minimum volume, and have an opening range breakout of at least 30 to 50 cents in a single run on the prior day to qualify it for current day's trades. Okay, well, our main focus is on gap continuations. And I pioneered a lot of the gap continuation trading starting back in 1999. And since then, a lot of people have copied me, but I'm still the original. So we'll do things interactively. I'm not going to read all this stuff, but main thing, we focus on gap continuations and multi-day high breakouts, not so much inside charts. In the last PowerPoint before we jump into our live markets, the 3 core skills that I like to teach so many thousands of you at Trading Open is visual pattern recognition is number 1. Trade management's the most important, of course, but in terms of what you learn from me, not only that for the exits, but visual pattern recognition and tape reading with timing entries and exits in pursuit of profit taking is what we look at here. So I like to give you some very good, sensible strategies that hopefully help get you up to speed on what you're looking at doing. And oh, thanks. It's great to see all the kind words. I appreciate all the good to be here and all that. Appreciate it, guys. So here we start off trading markets first. What's the profile of the market? What's going on? They're selling the market, right? The spiders are down. So we may see an uptick in gold miners like GDX. They're kind of hovering there. And the main thing we want to look at initially is our gap charts like UGAZ. And what you're looking at here is my trading workstation, and you can see the time and sales window here in the middle. It's the most, that and the 1 minute candlestick chart are the 2 most important parts of what we look at. We also look at close-up 1 minute candlestick charts so we can kind of put a microscope on price action and trade price action breakouts effectively. This is a very intelligent, focused, professional session. This is the same exact training that I've trained so many traders at in my live money show and personal trade mastery seminars in Las Vegas, New York, Denver, Dallas, California, and Anaheim, and elsewhere. So I've been around the world teaching people, and one of the things that I think traders get the most out of my training compared to other people's is I do very intelligent, specific, professional grade training that walks you through the entries and exits. I used to be a corporate trainer for Ford Motor Company and Rockwell International and McDonnell Douglas and Sheraton and many other big Fortune 500s. So I've got a corporate training background to bring to help the world's traders, in addition to all my live real money trading experience, of which you can see hundreds of real money trades documented at my www.tradingtalk.com forum with over 110,000 views on my real money trade thread. So it's all good. So let's see what's headed up. UGAZ is parked up here at new highs. That's an ETF. Deutsche Bank is at new lows down here. That's a nice gap down. Friday it was a near $21 stock. Now it's a $19 stock. We'll see if it keeps on heading down or if the sellers stop the madness. There's got to be a better way, and it bounces up here. Either way, we'll be ready for it with a box trading range, which leads me to the gap and breakout. An exclusive benefit for being here as one of my Trading Open live room members is we have our long triggers and short triggers. A good professional trader doesn't only trade one direction, because you can't predict, you should expect that the trend will continue most of the time, and it does. But on the many, many times where there are reversals in trend, it's a smart idea to capitalize on that, whether it's, for example, here on this one, Deutsche Bank, I've got, you can see we look for a long if it gets over 1950. The reason for that is it's above the previous day's low, which is likely to attract new buyers, at least up to 20. If the sellers continue, which is the most likely scenario, we can go short down at 18.6, and I'll likely tighten that up a bit. In fact, let's go ahead and do that. We'll tighten that to 1880. So we go short if it drops under 1880, and again under 18.6. Which highlights another feature of the room here. I give you often two entries, both longs and shorts. So that way, if you miss one because you're following something else, you get a second chance at it. My whole approach to professional day trading is, number one, find high volume, high velocity breakout charts, particularly gap continuations are my favorite, but you're often going to find other charts like Snap that had perfectly day tradable ranges, right? 25 to 29. This is an example of a mean reversion, like I had in my stocks and commodities article, where it ran up, it pulled back to 50%, and then resumed its trend. The main thing is the point range. So what you don't want to do is trade some stupid $3 stock that has a 50-cent range, and you have to trade thousands of shares to make any money. That's a way to fail and to blow up your trading account. I inherit so many people that get burned by these internet marketer, hustler, all these kids that were in high school when I was learning how to trade. A lot of these guys in their 20s and 30s, and they're out there trying to sell the pipe dream of, it's funny, you watch even some of these videos of people driving fancy sports cars and fancy travel plans and claiming to be the world's greatest cheap stock traders. Stop the madness. I call BS. Let's see their Schedule D tax return. Let's see how much money they make trading versus teaching trading, and you'll see a huge disparity. Well, anyway, as the guy who actually really trades, I'm here to tell you, you want to trade instruments with a nice wide trading range where it's easier to make 50 or 80 cents out of than something, like these cheap stocks that, let's just pick up something, the penny stock traders or cheap stock traders would say something like, oh, I'm long thousands of shares here and I'm selling for 3 cents profit and I just made lots of money. No, that's not the truth. That's not how day trading actually works. What you got to do is find the best gapping and wide range charts with sensible trading ranges that you can actually do well with, and then identify, as I teach here in the patterns for trading open. For example, this is an inside chart with an ascending triangle. So that's nice, but how do we trade it, Ken? Well, I'm glad you asked. 2 snaps up, boom, in on film. We got 2880 for a breakout if it takes out. Not really. I have no idea what Snap company is. I'm a day trader. I don't care why it's moving. I just care, can I make some money with it? So long trigger is if it gets over 2880, right? And that's identified for you here. The short trigger, way down at 2680 on a loss of the previous day's congestion low. I may tighten that up into the middle of the range here on the open, but for now we'll leave it where it is. So you've got a box range identified, both long and short. It's a very handy, approach that so many thousands of traders have valued over the years, is because we like to go through strong charts, tight entries, and ultra tight stops. Which brings me to risk management. The initial default, which very rare that we'd let anything run, is 40 cents maximum on a stop. Typically in the live room here, I like to get us out at break even or flat trades. If something, say, for example, if it runs from 28.8, runs up to 29 and stalls and starts to drop, we get back out at break even at the 28.8. That's the core strategy. If something runs 20 cents or more, I want you to exit half the trade to lock in a gain and then trail a stop at break even on the rest. So let's say this guy does take out new highs over 28.80, which it likely will, okay? We'd get in long, and again, only in market, not pre-market. If it hits pre-market, we'll reset the trigger for you. But let's say it stalls here, and then finally at 9:35, it breaks out over 28.80. If it runs up to 29, we'd sell half and then put a stop at break even on the rest. And that protects us from these these parabolic arc charts. If something runs up, does a little false breakout dance, and drops back down, at least we take some profit for our trouble with a 20-cent exit on half the shares and then a break-even exit on the rest. So you're playing with the house's money once it gets up above the entry. And I teach you guys how to master break-even exits as a core trading strategy. And that's one of the key differentiation points here at Trading the Open, is we like to specialize on primarily gap stocks, secondary, breakout stocks. Third choice would be inside charts, but the main thing we focus on is gaps with very tight risk management. I try and get my traders out at scratch. If a trade starts to go sideways, we get out as close to break even as humanly possible. And I think that's I know that's one of the things that my traders like most, and I think that's a big differentiation between what I teach and my trading style than other people. Anyway, let's take a look at these charts. Tenet Healthcare, I'll go top down through these. Got just a few minutes here before the bell. THC, I like it because it ran 19 to 21. It's got nearly a 2-point range on good volume. So that makes sense to trade either for breakout or retracement. Monster Beverage had a monster day on Friday doing a cup pattern breakout with the low 46 and change and a high of 48. So nearly 2-point range. So that's good to play with up here, preferably for long, or if it drops, we go short into the range. And the long and short triggers are here. Long triggers are in green, short triggers are in red. CSX, one of my traders mentioned this, and thanks, last week, and this did a really nice spike subsequent to that. We'll see if it continues on up today. Gappers today include UGAZ to the upside, Deutsche Bank to the downside. That's a nice, preferably short down here. And a cheap chart, the TGTX is doing a gap. Wow, if anyone got 9.6, congratulations. I'd sell right now before the bell. Looks like it's continuing on up. Let's reset the trigger up at 10.50. Sometimes my calls are so good, like the 10.60 long in that, they'll keep running on up even before the bell. I said to go long back there, so boom, flawless victory. We'll see who else is in the money. Next up to wrap before the market opens, Snap. Wonderful trading range, 25 to 29, 4 points of range on a $20-ish stock. Makes perfect sense to engage with, preferably for a close of this region up here for a long play in Snap. Our airline stocks are all strong Friday, and American has the best chart. Kind of pulled back here, but we'll see if that gets a little bit of a lift. Macy's going on sale as department stores are struggling. Descending triangle pattern here with support right above the 31. We use whole number support and resistance triggers a lot. And Fossil, another nice wide range. For a cheapie, it went almost 19 down to 17. So we'll see if it gets a little bit of a pep in its step for long up at 1780. So with that, we are ready to get this party started. Markets open momentarily. The spiders are continuing down to new lows. So we'll anticipate upside reversal plays in instruments like UVXY. Where did I tag that guy? 2030, 20.3 on the long. This goes up usually when the stock market goes down. So one of our VIX ETNs. So that's how to play a short market. The markets are going down. We play our bear ETFs, not just limited to the VIX instruments, but that's my favorite instrument that I've traded for years. It goes up when the market goes down, just like XIV goes down when the market goes down. We'll see which of those hits in our live market coming up in less than 30 seconds. Anyway, it's a real pleasure to have so many of you here. I really wanted to take time to say thanks to all of you for joining us. We've got another big epic turnout for our live Trading the Open room session for today, Monday, March 6, 2017. Got a question. Are you ready? Here we go. Markets open in less than 20 seconds. I just had my ceremonial big swig of coffee. I'm a day trader. Coffee is my friend. Anyway, let's stop the madness. There's got to be a better way. Let's see what the market's going to do. Learn how to actually trade. Here we go. Ding, ding, ding. Markets are open. Let's keep an eye on our percent gainers right out of the gate to see who's starting to print green in the carnage. Got a 1050 long on this guy. Let's put in some shorts too, just in case it drops back to the range. We'll go short in this if it drops under 940. Again, this is all for paper trading, demo use only. By being here, you agree not to make actual trades. You should never try and copy people's trades or actually do the sim trade. Use a demo account. I like interactive brokers. You get $1 million sim account, and there you go. Anyway, TGTX. I want to see who's starting to run early, right out of the gate. So to understand that, what you do is just click through your charts rapidly. You don't just sit there and look at something. All right, what I should do? And in the meantime, 6 other ones run without you. You got to have a very fast, focused approach to your chart so you can see where the pattern recognition skills are and where things are emerging new 2-day highs and lows. So that's an emerging new 2-day low in Macy's. 30.9 is the short. And the reason I put it way down there instead of right now is because why? I expect it's going to bounce or find some immediate support at 31 whole numbers. So we don't go short right above a whole number. We instead wait for it to capitulate and go under the whole number. So for that reason, be a little patient and see if it takes out 30.9 later. UGAZ starting to drop a little bit here. 1720 is the short trigger. We're not quite there yet, but it's headed that way. And notice too, please, one of the things that you need to develop your skill set as, is important to get the strongest charts with the strongest price action. And also a good point too, make sure that if you're going to be a day trader, you got to trade with a direct access broker like Interactive Brokers that has, short. If you do short, that they do have a good short list, that there are shares available to short. And I know most of you don't like to short, and that's fine. The majority of our calls here are to the long side, but we do have occasional shorts. And if you do want to short in day trading, you need to make sure that a qualifying feature or characteristic is that your broker has an adequate short list. Again, in America, you need to have at least 25,000 to trade. TGTX continues to run. Boom. Flawless victory. Give it up. He shoots. He scores. The crowd goes wild. I said to go long at 10. Sell it all now. Sell it all now because we're right at the 11. If you got in long, epic wins. I said to go long at 1050 and 1070. How much money could you have made had you sold this? Now, why would I be selling now? Who can tell me? I mean, it keeps running up, Ken. Why would you sell now? Maybe it'll run to 200. Maybe pigs will fly out my butt too. It's at 11. It's at a whole number resistance, gang. So sell it all now. I got you in long at 1050 and 1070. We're 1085 by 90 on the inside market. We're likely to drop now because we're at the whole number. So it's a smart time to sell, take the money, and run. That's how you day trade. And the way that you follow up with these alerts in live markets, that you stay on top of it and not chase or be late, is what I do is I'll put in buy stop orders before the market opens. So that way you've got all these set up in your brokerage account for demo account use only, right? In your brokerage account before the opening bell. So that way you get the fill into the market and you're off to the races. So you got to give it up for the kid. 1050, 1070, well, 53, so maybe not a kid. But anyway, 1050, 1070, boom. Epic win. So new traders, sell it all now. If you're an experienced trader and you're still in, I would use an 11 as a trailing stop. So play it tight. But personally, my official call would have been to sell right under the 11 because that's a good rationale or the criteria for entries and exits is get into the range of a whole number and then sell right under a whole number because often it'll stall and drop there. If you're an experienced trader and you're still in, I would trail a hard stop at 11 even. Actually, with this inside market, I'd use 1025. So that's my exact exit. I'm sorry, 1125. So if it gets under 11 and a quarter, we sell it all. But does everyone see why these types of charts make sense? Gap continuations are my specialty. I told you guys to go long at 1050 and 1070 before the opening bell. It's up a point from my first call and 80 cents from the second. How much money could you have made had you taken either of those? It's still running up, so bully for it. One of the things that I want you to learn from a tape reading standpoint is your exits. So for example, we're at 1140 by 42 on the inside market. Let's sell it all if it gets under 1125. Experienced traders, you may still, okay, now it's under the 25, so sell it all now. That would be the official exit for experienced traders. I often use dual exits. I'll put the kind of the safety exit is always right under a whole number for new traders, just to get in the habit of selling under whole number resistance, which makes perfect sense. For experienced traders, you may let it ride a little bit further to capture a little bit further price action if it continues up. And even then, I use a tight exit, and everybody'd be all cash now, happy, breaking open the champagne. It's 5 o'clock somewhere, right? And celebrating an epic breakout. 1050 and 1070. There's a good no BS honest calls that I made before the market opens. Do the math. By the way, if you want to subscribe, which intelligent people do, be sure to go to the subscription page at tradingtheopen.com, where you too can join all of my traders each month. We're live every Tuesday, Wednesday, Thursday morning, so you can learn these types of patterns yourself. Does everyone see why now would be a smart time to sell? We don't see a shooting star. We don't see a bearish engulfing, but what we do see is 2 red candles, and that's another reason from a momentum trader standpoint to vacate a trade. And again, I highly recommend you learn from my colleague Steve Nissen on candlestick charts, so you can learn the thought process behind the different entry and exit types of reversals and breakout charts that exist out there. In live momentum day trading, it's all about speed. Let's continue on. THC, Tenet Healthcare, 2130 long. It started to break out, pulling back a bit. We'll see if it continues on up. 2150 would be a secondary. UVXY, as anticipated, is starting to get some heat. I told you guys this would go up if the market sells off. I told you so. Well, anyway, UVXY, the long trigger is 20.3, so we're not there yet. Enemy fighters headed your way. We'll see if Luke, get us out of here. Chewie, get us out of here. Anyway, we'll see. Big Star Wars fan. We'll see if it gets over 20.30 in UVXY. It will likely if the market sells off, right? So that's our first long in UVXY. Another thing you've got to pay attention to is the ARMS indices, also known as the trends. We carefully follow those for buy and sell pressure down here in the bottom right where I'm circling here. Over here, gang, over here. Whoosh. Under 1.0 is long bias, over 1.0 is short bias. Currently got a pretty strong long bias in the NASDAQ ARMS index and a kind of a break even, not much of a signal in the NYSE in the New York Stock Exchange trend. So they're buying NASDAQ stocks is what that tells you. So let's see where the pressure is. Where's our pressure points? Who's starting to get some heat? Like I said, Tenet Healthcare looks healthy. We'll see if it continues to get a good check, get a good diagnosis up at new highs over 2130 and again over 2150. Who else is starting to run? That's an okay chart. Hasn't moved yet. Whole Foods looking healthy. Let's see if we can get a whole paycheck out of that guy. 29.8 on the long, 29.4 in the short in Whole Foods markets. Overall, it's a short chart, so I'd prefer to go short down it. Hey, Greg, thanks for the American heads up. You are correct. 46.40. Thanks to Greg. Boom. Yeah, if any of you see any of these alerts that are working out great, certainly appreciate it if you bring it to my attention, because I've tried to scan like a maniac for you guys. Now, new traders, here's a perfect example. I said to go short at 46.40. If you took it, congratulations. You're banking a significant potential profit. But if you're a new trader, cover it all right now, because we're right. Actually, I would have called it a bit earlier had I seen it earlier, but we're right at a whole number, which is also not coincidentally right near a previous day's low. Right? So for that reason, if you're short from 46.40, now would be a smart time to bank a near 60-cent profit on the trade and cover it all now, because we're at a prior day's low. And by the way, this is one of the core reasons I've trained so many thousands of day traders of this in the last almost 20 years. Use your previous day's open, high, low, OHLC profile, because that's what the high frequency trading algos and dark pools are based off of, or they use OHLC triggers. I know my institutional clients, I hear all this stuff. So anyway, as a emerging day trader, you're always looking at exiting trades on inside charts like this near prior day's support and resistance. So for new traders, now's a good time to take the money and run. Cover your short, take your 50-cent profit, and be done. experienced traders, I would cover the short, use a 45.80, the nearest 10 cent. A reason to cover. If it bounces over 45.8, we cover out, take our 60-cent profit, and march down to the bank with it. If it keeps running on down, well, good for us. We'll follow up with it. But does everyone see that pattern? That's one thing that I'm keen on teaching you here exclusively in my Trading the Open live room experience, is how to simply follow patterns for longs and shorts by getting out near prior support and resistance areas. It's like TGTX. I got you guys out near the what turned out to be the top in that guy. From my 1050 long, it ran all the way up, and 1070 long, it ran all the way up to 1150 before starting to drop. Let's tighten in the short on that, right? Let's do 10 point, what would I use? I was thinking, what would I do where I'm trading this live? What would I use? I'd short it at 1070. And then again at 9, actually, let's belay that 940. Just tighten that up because that's right at support now. Let's do 1070 the short. I would not be buying this guy any further today. We rocked and rolled out of the gate with the 1050 first long, 1070 second long, sell it all right into the 11 region. That was a great day trading epic win to the upside. Got you guys out at the first sign of trouble. It's already ran so far today. It'd be a really stupid instrument to retrade to the long side, right? Odds are it's going to drop and chop. I always like to mark out the likely support resistance scenarios for you guys too, kind of like the answer key to the market. I mean, yeah, it may keep running on up, kind of like crab legs. I like a good crab leg with hot butter. I was at took my family out to Red Lobster. What was it? Sunday, and I was like they have a lobster special now, so I got surf and turf, but don't want to make y'all hungry. But anyway, I look at like crab legs. If you're at crab legs, what's the long and the short of it, and what's the most likely scenario from a price action standpoint? I like going to Bellagio and getting the crab legs on their weekend special, because they got both the not just the snow but the Alaskan king crab legs at Bellagio, and I like me some crab legs. Anyway, CSX, not to make everyone hungry, sorry about that, but it's a seafood side note there. CSX is continuing on up. 49.8 is a long. Let's tighten that guy up to risky for experienced traders only. A straight momentum play would be to go long if it breaks over 49.50, and then again later at 49.8. So we'll give a couple of long plays. A question from a trader about TSM. I know that's a semiconductor, Taiwan semiconductor. No, I don't think much about it because it doesn't have any range. This would be a perfect example of an instrument that would be really horrible to day trade, because it's got a 50 to 90, it's only got a 40-cent trading range. So remember, if you do ask about an instrument here, please make sure, in the friendliest possible way, no flat charts. We don't, because you can't make money, in my humble opinion, trading charts that don't have enough range, right? We want to be able to, here's another quick tip sheet. Look for charts with the biggest possible open, I know you can't see that, but opening breakouts of 50 cents. And when you're looking for charts that are worth trading, it always makes sense to focus your energy on charts that are, where is that? With at least a 1 point previous day's range. Okay, so this thing does not meet that criteria. It only has a 40-cent range. So for that reason, I'm out. Dun, dun, bump, 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 bump. I always watch Shark Tank. This type of chart, however, a rockstar breakout, right? Or Snap was a good example of a chart with a nice wide previous day's range of multiple points that's worth engaging with. And 28.8 is my long trigger, keeping us safely out of reach of the chop zone. And 26.8 was a brilliant place to look for a short, because that didn't hit yet either. It keeps us out of the chop zone. If you remember the great movie The Fast and the Furious with Vin Diesel, the Xander zone or something. Anyway, we stay out of congestion boxes, because that's going to get you in trouble as a trader. If you're going to make it as a day trader, you got to focus on price points that are likely to attract, like a magnet, new buyers after you get into your position. It's a very intelligent way to trade. So this is my pick of the day. This one ran up. Normally we have quite a few more that hit. So I know we're only 15 minutes into the session, already starting to rock and roll. We'll see where things head today. Let me see if there's any others that are emerging. What's going on with the broad market? We have some divergence here with the ARMS indices to the S&P. Our spiders are taking out new lows, or if you follow the minis also taking out the same exact chart pattern, new lows. Anyway, we use the spiders. Spiders are down at a new low down here, and our trends are either long or flat, so that's divergent. Usually with this S&P like this, you'd expect both of the trends to be over one, right? Make sure you learn about the trends. I learned about the ARMS indices from my colleague Tony Turner in her excellent book. My first Amazon review back in '99 or whatever was Beginner's Guide to Day Trading Online, and she did a really good coverage of the trend. You can Google trend. Anyway, it's a good market internal indicator to help you determine buy and sell pressure in the market. So learn from people like myself and Tony Turner and Harry Boxer and JU's good. Other people that know their stuff, right? That makes a difference. Not these young 20-something kids that are claiming to trade $3 stocks. And then, of course, they post all these videos of tropical islands to try and beguile the less sophisticated, experienced people into following them. So that's why most of their followers are also young guys who don't know any better. Well, stop the madness. I'm here to tell you got to focus on good, strong charts like Deutsche Bank, right? It's a good short chart. 1880's in the process of taking out. Use a break-even exit if it gets back to the 80. Get out of flat. Next short if it gets under 1860. And I'll often do that if something's even just starting to work out. We want to get you guys back out of flat if it misbehaves. With markets headed down, let's see if any of the other inverse ETFs are starting to look good. Dust is still inside SKF. These are all too thin. The volume's no good in those. So the problem with that, a lot of the ETFs are not really good for intraday trading. Personally, the only ones I like for day trading are XIV, UVXY, GDX, and Dust is also good. So you trade the VIX and gold sector. Trade the VIX using the VIX ETNs and the gold sector using the gold ETFs. Either the short one is Dust or one of my favorite longs is GDX, but those aren't really worth taking a look at just yet. So instead, we'll focus our energy on other charts. TGTX is starting to droop here a little bit, trying to get under that 1070. You can use a secondary short trigger at 1040 as well. So if not ready for a first entry, there's a secondary play too. Hey, morning, Phil. Yeah, it's great to see so many of you here. We're still at 408 and holding, so exciting. All it takes is one great chart to make your day, right? And the wherewithal or the intelligence to be able to exit the trade at the first sign of a congestion or a reversal. There's nothing more frustrating, than taking a big stop. But only slightly less frustrating is being in the money, say $800 in a trade, and then you wait too long to get out, and then your $800 coulda, woulda, shoulda drives you nuts to second guess yourself, right? With uncertainty, if you're up in a trade and you're up, say, $800, and then you let the trade get back down to break even, and you say, well, dang, I should have got out at the top. You do that a few thousand times and you learn. Take the money when it's there at likely areas like whole number or half number, 50-cent increment or whole number support and resistance trigger points. It's always better to lock in a profit and then set a re-entry trigger than it is to try and let your winners run only to see that not materialize, and often it'll take back a big percentage of the profit that you could have banked had you gotten out on time. So one of the things that I like to teach all the world's traders here at Trading Open is proper entries and exits with great charts, well timed and called live, so that you can practice as you look over my shoulder and figure this stuff out with me. So let's see who else is starting to run. Not much, just kind of a quiet day. Market's down. Those charts aren't any good. I'll pull up a leaderboard scan. We'll see if there's anyone else that's headed up or down. That one's barely worth trading, PTCT. I usually don't follow these cheap charts because they usually don't run too far. But this one, may be okay. It's one of those it may be okay for a pivot long. These are the riskiest charts, or inside charts that are inside the previous day's long. I would take a bounce play in this. I'd play this one. I'd prefer to go long this chart because it gapped up pre-market and then sold all the way down to prior day's support. So 10.10 and again at 10.30 would make sense for pivot plays. And if you're looking at your candlestick patterns for signs of reversal, there really aren't any here. This is still a lot of red headed down a new low. So I don't see a hammer. I don't see a bullish engulfing. I don't see a sequence of increasing whole real body green candles. So that's why we're not long yet. I'm using a simple price action move above this congestion box near the 10 whole number resistance at 10.10 would be the first long. If it does continue in trend, which is slightly more likely to occur, I would wait until 9:40 before going short in this instrument. That was a good chart for us, right? We got you guys in long earlier and we got out near the whole number 11 and that was a good exit. We'll pull up our leaderboard scan, our hot list, and see who else is starting to run. Let me see if any of these guys are worth a shot. I always cover these like if I was trading these things live, how would I trade it and which ones would I actually trade. So it's like to give you good, honest, step-by-step, sensible plays. This one would be okay for, I'd rather go pivot long in this because it started as a gap up. It came all the way back down to support, starting to find some support. Here, that one would be sensible for range resources, RRC, for a pivot long if it gets over, what, 28.20 or so. So we don't want to catch a falling knife or a dead cat bounce. We don't want to fool around with it right now. Stop the madness. There's got to be a better way. But if it continues on down, for that reason I'm out. We'll see if it takes down a new short under 27.7 or does a bounce over 28.2. We always like to have a very intelligent, focused, like you're in a live seminar session here, right? Unlike other live rooms where they just sit there and quietly watch stuff forever. It looks like it's going up. Unintelligent. I'm a workaholic genius, UCLA graduate, multi-degrees. I like to give you guys very sharp, focused, intelligent walkthrough and analysis of these charts as we see emerging new plays so you can follow along and learn with me, as your coach. And I'm a, smart former MBA professor, a guy who's taught thousands of people in the real world as well as over the internet. So I've got the corporate credentials and the educational credentials and the real money trading credentials in addition to being able to call chart plays. I like this gap down, that it's gapped down like that, but it hasn't done a whole heck of a lot yet. CS, the ticker. I would take a single shot at this. It's not got much range in the prior day. Probably good for a short if it drops under 1490, maybe later in the session. Be kind of a skeptic on a bounce, so I'd put a long trigger way up at 1540. And as a pro trader, that's as long as it should take you to think about what you're going to do as a trader. You don't overthink it. It's not rocket science. It's a numbers game with really tight risk management, rule number one, and chart pattern strength like these types of charts as our qualifying reason why something makes sense to trade. We look at the outlier charts, the percent gain and loss gap charts that have, like that one that has the best trading range. That one's day tradable, CNCE. And I try not to make the list too unwieldy or too long, but I do like to give you, unlike other people that only cover 2 or 3 instruments, you can't make it as a day trader if you're only going to trade 1 or 2 or 3 instruments in a morning. You positively, absolutely, you have my word, you cannot make it as a day trader if you're only following 1 or 2 instruments, because odds are you're going to get stopped out on half your instruments. So where does that leave you? You got to play a field, maybe 5, 6, 7 entries or exits, so you give yourself multiple occurrences or multiple entry shots at things that are actually volatile. And it's a numbers game. You're out there scooping up your trades intelligently. This one is likeliest, if I was in Vegas laying odds, I'd say it's likeliest to do something like that, right? It may pull back to right above that whole number support and do a little pivot. So we may want to fire off a little short in this region. If it does continue on up to new highs, we'll look at it over the 1550 in CNCE. It's Concert Pharmaceuticals, another one of our pharmaceutical sector charts. I want you to memorize this pattern because it's very effective. It's the one that I documented for the world's traders in stocks and commodities in one of my articles a few months back with the bullish cup gap continuation. You have a bullish cup. A cup looks like the letter U. I know Steve always reminds me, be sure to explain to people what a cup is. And that's true. I shouldn't assume that everyone knows chart pattern 101 stuff because many traders don't. Anyway, it looks like a coffee cup with a nice letter U, and then it takes out new highs. There's often a congestion of the handle at the right side of a cup, so we don't go long right above resistance. We do catch the run up, and these bullish cup gap continuations should be in every professional trader's playbook. It's the best entry strategy for both swing and day trades. But that's day tradable. That's a great chart for entry. So occasionally we will see, and I look for ones that have an M in it. So we got millions of shares this late in the session as we're getting close to the 10 o'clock hour. What we don't like are charts like this. Who can tell me why trading $3 stocks, like this one, I'm just randomly pulling this out of the watch list. Why would this be a really stupid, epic fail to trade? Why? What would be the dangers in saying, oh, I'm long 5,000 shares, sure, I'm up $800, sure, I'm selling right now? No, I don't think so. A lot of these phony baloney kids out there trying to purport to teach how to day trade with these cheap crap stocks. What's the danger in trading a $3 stock like this? I mean, who could tell me? Yeah, it's cheap. It's only a few bucks a share. The volume's fine. I mean, usually the cheap stocks don't have this kind of volume, so at least the volume's over 15,000 shares a minute, so that's something. So that means your entries and exits, liquidity, your spreads may only be a penny or two. That's the reason why you want high volume, is you want tight spreads. But overall, this is a very inconsistent chart, right? I mean, odds are maybe, just voice of reality, maybe you get in a little bit late and you say, oh, I'll buy up at, say, 380. I think it'll keep running to 4. And then it runs up here and you say, well, I'll let it go and keep running up. And then it comes down and then you say to yourself, well, surely it'll come back to life, so I'll let it go long, and then it comes all the way down there, and you say, oh, okay, well, crap, I lost previous day's high, so I'm going to stop out, and you get stopped out. And then it bounces back up and would have got you back out of flat. Anyway, it's zigzag up and down. That's the problem with these inconsistent cheap charts, is they don't have consistency. If you trade cheap charts, they should look like this. It has multiple point ranges on hundreds of thousands of shares of volume, like our call here at 1050 and 1070. That worked, and the exit right near 11. So we didn't get the exact top. We got the nice big run up and got out at the first sign of trouble. And that makes perfect sense. And those are the type of charts that I would present to you that I think make more sense to trade than these cheapies, because the cheapies don't run very far. And trading should not feel like it's a video game. You're not playing Call of Duty or Battlefield or some first-person shooter. You're trying to make money as traders, and the only way that I know to do that is to trade instruments that have good wide ranges that are tradable right out of the gate. We don't want to trade too expensive instruments like Netflix either, because that's too expensive. $140 a share, and it only has, what, a 1.5 or so range. The numbers don't add up, so that would not make sense to day trade, right? Instead, you want these kind of gaps with cups that are priced more reasonably, like this one, that have superior trading ranges. Does everyone understand the difference? Say, for example, a CNCE versus why Netflix would be bad. The numbers have to add up. I'm an expert in numbers. I'm a former corporate statistician for Ford Motor Company. I know my numbers. And one of the things you want to do is make sure your leverage points and your numbers and your consistency of charts is intelligent, it's strategic, it works. So something that's, here's a bullish cup. It didn't even run that far. It ran all of maybe a point or so at the most. And it was 140 a share after its bull cup, whereas this one, for a tenth of the price, after its bull cup, it ran a full 1.5 or so. So you get multiple, percentage improvement on the price action. So these type of charts make sense to trade. And that's what I like to specialize in here at Trading Open. So PTCT is starting to bounce a little bit. I said to go long if we get over the 1010. It is starting to do that. I'd use a break-even exit. If it gets back to the 10, flat the trade. Go back to flat. Keeps running up. Good for us. American Airlines continues on down to new lows. My short call on this guy was 46.40. Continued to run all the way down to near 45.40. So it ran nearly a full point for you from where I said to go short. And I said new traders cover it here. Experienced traders, if you're still short, I would put 45.60 as the cover stop. So that way you lock in an 80-cent profit on that short in American Airlines Group. Tenet Healthcare is starting to look a little unhealthy. 20.2 is the short. Let's tighten that up. Let's use 20.6. We still keep the second entry alive too. If it collapses and goes all the way down here, 20.6 the first short, 20.2 a second. If you look at our broad market at the S&P, you can see it's starting to bounce a little bit lately. So started off the day weak, kind of a gap down continuation short in the S&P and the broad stock market, but it's starting to pivot here, and now it's pivoting yet again right after 10 o'clock, which is very common. We get a 10 o'clock pivot often. So we have a bearish engulfing here, so we'll see if we get some sellers at the 10 o'clock. If some buyers come back in and lift it up and pierce that 237.64, that would be a long signal for today's markets, because that would be right above this cut pattern resistance. So the first R1 long trigger would be right above this high, right above, this technically it would be right here. So if we do take out guys, that'd be R1, and R2 would be right here at the 237.90. S1, I would use the 45. And S2 down here at the 10. So right now it's in the middle of a trading range. So odds are it's going to chop around and not do a whole heck of a lot. So overall the bias is short in today's market. So it's more likely to keep dropping. But either way, we're ready for it. And I like to teach you box ranges for how to trade markets first, as well as these spectacular charts that have such good breakout potential. If anyone got my 1550, that's in the money. Sell half now, put a stop at break even on the rest. Another big booyah. Ka-ching. He shoots, he scores, the crowd goes well. But it might drop here, so we're going to play it tight. Next long would be if it gets over 1620. And if it goes short, this guy starts to drop. Let's tighten in the first short to 1530, eh? That makes sense. A lot of friends in Canada, so I say and about a lot. Kind of rubs off, but I love people from Canada. Canadians and Australians, the nicest people in the world. Anyway, 1530 was my long call. How much money could you have made? Well, 40 cents a share, so now 50 cents. But from a tape reading standpoint, we want to look to go back to cash if this loses, say, 1570 in the tape, right? I would use right here is the reason to exit the trade. If we get under the 70, we play a tight game, because professional traders do that. Every dime counts. Now, of course, my calls are so good, this guy keeps skyrocketing on up to new highs. We're in the money. Crowd wave. Go, kid. It's your birthday. Boom. Nailed that. 70 cents in the money. Oops, 80 cents in the money. Do I hear 90 cents in the money? We'll see where this guy goes. I said to go long at 1550, but did you listen? No. But if you listen, you'd be nicely in the money by 70 cents. Trail a hard stop at 16, gang. If we get under 16 even, let's go back to cash. That's a whole number exit. New traders, sell it all now because we hit the whole number. Watch this. I say that before I shove all in at poker tournaments at Bellagio and whatnot. But anyway, or Venetian or Caesars. But if we get under 16, good time to go back to cash. I said to go long at 1550. We're at the 16. New traders, sell it all now, just on general principle, because we're at a whole number, and you got a 50-cent win in your pocket. Experienced traders, sell it all if in the tape we start to see 1598, 99, or lower. Does everyone see the value of tape reading exits like this? And I use a nice, large, easy-to-see tape. I've trained so many tens of thousands of traders using my large tape because it's easy to follow. I purposefully customize that tape so that it's not some little tiny, dinky, red, green, yellow, Christmas tree-looking, rainbow-looking, small font, impossible to see. I like to make this stuff real crystal clear for you. 1620, now also in the money. Sell half now. Use a hard stop at 16.4. That's going to be your exit. Get off the bus if this guy gets under 1640. We are now 1 point in the money from the first long call. Good, no BS, honest calls, right? Sell all if it gets under 1640. The next long was 1620. That's 40 cents in the money. New traders sell all now. Experienced traders use a 1640 exit, trailing a hard stop on concert firma up here. And that's how you day trade, with these kind of charts that have multi-point runs. Going to do the math on if you'd followed all my alerts today, how much money would you be up? And then make the intelligent decision to invest in your education by joining me at tradingopen.com/subscribe. I used to charge and get $4.95 a month for my live room for years. Now it's all the way down to $197 a month, so I cut the price more in half. Does that make it up on volume? I got so many traders here, right? What are we up at? 408. We're still at 408 and holding for now. So anyway, join me at tradingopen.com. Love to see you as a member. I like to give you good, professional, honest, step-by-step training at a value that actually works most of the time, you know, that gives you good, potentially works most of the time. Good calls that are pretty intelligent, right? There's no denying the power of my calls, right? I mean, just compare my performance to anybody in the world that runs a live stock trading room. I welcome comparisons. And I like that song by MC Hammer, Can't Touch This. Ba 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 bum 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 boom. Nailed it, baby. I said to go long at 1550. So to do the math, had you traded, 1,000 shares, how much would you be up? Well, it would be a lot. Or 1620. Now trail a hard stop. I want to get you guys out near the exact freaking top. So let's trail a hard stop at 1720 on this guy. If you're still in, 1720 would be the exit. I said to go long at 1550 and at 1620. Thanks, amazing. Yes, you're right. I am amazing. He shoots, he scores. If we sell it all, though, if it gets under 1720, it's quite astonishing, the breakout potential once you know the patterns and you get educated in the right charts. Not stupid penny stocks, not stupid $3 stocks like these kids teach. These are the kind of charts you make it with as a day trader, all right? Just saying. Sell it all if it gets under the 20. And there we go. Okay, I would sell it all now. I saw enough transaction flow to get me out. So now would be a good time to exit the trade. Long, long sell. Right? Sell it all now. Stick a fork in it. This guy's about to roll over. I'd use the 16.6 and a 15.8 rollover short with an exit target at the midpoint near 15. All right? And as soon as I said to sell, what happens to the stock? It goes down like a rock. Now remember, institutional traders out there, you guys are not supposed to be trading these things with live, large trades, right? This is all for paper trading only. But it's so funny, I'll say sell and then instantly see all this order flow come into the sell side because I'm a market mover, right? People follow what I say. So anyway, but that's how you day trade, right? Those kind of charts. Even on a Monday, which is typically I don't run the room on Mondays because usually Mondays are crap days for trading. So I do the open house on a Monday to give you guys kind of a taste of what it looks like. But that's how you day trade. You have my word. Those are the right kind of charts to day trade. Instruments with volume and volatility are two favorite V letters. Volume and volatility. So those are our two big runners today, CNCE, TGTX. Got you guys out near the top. TGTX, the 10.7 short and the 10.40 short now are both in the money. If you guys took those short calls. Quadruple kachingos. Boom. Cover out all open short now because we hit our exit target of 10. I said to go short at 10.7 and I said to go short again at 10.40. We went all the way down to the 10. Let's go ahead and vacate the trade. And yes, I realize it could drop to 6, but I'm in the business of teaching you how to potentially extract money before the market takes it back. We hit and run. We're hit and run day traders. That's what we do. So I said to go short at 10.70 and 10.40. Now is an intelligent time to cover the short, lock in a profit, and walk out of the Wall Street a winner. I got you guys long on the way up. We sold right under 11, then short on the way down. We covered right here above the 10. Game over, right? That's how you day trade. So those are two really good charts, CNCE and TGTX. They're a little cheaper than I usually cover here. Normally the ones that run nicely for us are the ones in the $20, $30, $40 share range. But in this case, I picked two teen price stocks in the teens that ran really nicely for you, the TGTX and the CNCE. So, and I walked you through step by step, hopefully fully explained reasons why those entries and exits made sense and why they worked out so well. We're going to wrap up here. I wanted to thank all of you for being here with me for our live room open house. It's great to see a big turnout. We'll see XIVs continuing on up. Again, the reason why you got to follow a handful of instruments is odds are, out of maybe a dozen, you may have just 2 or 3 that run. And, the trick is you don't know ahead of time which ones are going to run. So you got to plan your trades. Like DB, Deutsche Bank's a good chart, but it hasn't run much yet. So you still got to play the field and play instruments that are likely to run. And it's all about likelihoods and numbers and occurrences and entries and multiple entries and exits based on trading the strongest high velocity charts. Sometimes ones like Snap look like it would have been a great chart today, didn't do anything today. While instead, the other instruments like TGTX and CNCE were the big runners. You have to have been ready to trade a handful of instruments at a moment's notice. And that's how you trade as a day trader. That's the truth of the situation. Tenet Healthcare used a break-even exit at the 26 if it pivots. Starting to continue on down for us. But anyway, good charts. I want to thank all of you for being here at the Trading Open Live Room Experience. This has been a Ken Calhoun presentation. I'm the CEO and founder of the Day Trading University and Trade Mastery. And I hope that this has kind of debunked some of the myths about how trading actually works and the types of charts that are worth trading and the thought process that goes into them, so that you understand how to scan for entries and exits, how to manage your entries and exits with professional tape reading and 1-minute candlestick charts, and make a go of this thing for yourself. So love to see you as members. If you're not yet one of my many legions of members here at Trading Open, and again, the link to subscribe is at tradingopen.com/subscribe. What a unique name. Anyway, great to work with so many of you here today, and I wanted to thank all of you on behalf of myself and my industry colleagues and channel partners. That's an explanation of how, at least to the best of my own experience and skill, actual day trading actually works. That's the type of charts and the type of entry and exit criteria. You really want to make a core foundation approach to your trades, so that you're focusing on charts that are likely to do well for you, and use tight risk management with time and sales to help you manage your entries and exits more professionally. But, do the math. How much money could you have made had you taken my alerts? Thanks, folks. You're right, good points from Bob and Ahmed and Damon and Skew and Bill and Ron. Thanks. Appreciate it, folks. Yeah, and XIV's headed up, which is interesting because the spider's trying to bounce. The XIV's kind of nice 2-day high breakout. Yeah, that's a good chart. I don't like the fuzziness, for lack of a better word, the choppiness of the trend, but I do like the fact that it did a bullish cup. So it's up at a 2-day high. It may be worth a shot up and new highs up there, but it doesn't run very far in a single run. It's kind of like Superman leaps over a building in a single bound. You want to have charts that run up in a single bound too, like this one, that have reasonably good, strong potential. So pretty much no matter where you get in long, would have worked out nicely. And that's the type of chart you want to start off with, kind of like people that are honest. You want to deal with people and situations that make sense and make a go of it. So anyway, thanks for joining me here for our live open house. I'm going to wrap up, and appreciate y'all being here. Look forward to seeing you as members. I hope that many of you will join and learn from me the ins and outs of these types of charts and how to scale in and out and how to set entries and follow up with live markets and make a go of it. So take care, and I'll see you next time. Bye-bye.